kicking it off here. So you've got myself, Miguel, as well as Sean Farrell next to me. We're going to be talking a little bit about our specific tax workflow. I think this is particularly important to clients because sometimes we'll let you know what we need, what we don't. And there's usually a little bit of a gap of you kind of knowing where you are in the process. Again, I know everyone on this call, all return clients, so glad to have you guys back. Sean, do you want to say hello to everyone real quick?
All right, guys, good to see everyone here. Thanks so much for joining.
Sean's the video talent today, so glad he's on. But of course, Sean's our account manager, so kind of call to action at the end of this call that if you do have next steps, you'll want to reach out to him. But just to recap, 3 stages: setup and upload. We have preparation itself, and then we have finalization, onboarding. And there are important and critical parts to each of those stages. As you might know, we begin with account setup and information request, and that's important because we really can't do anything. For those of you that are repeating, we have your prior year tax return, so you don't need to worry about that. But we can't do anything until we have your W-2s and then business P&L. Without those, we really can't even give you an estimate of what you are going to owe or prepare a meaningful draft tax return. So we do not start until we have 80% of the information. You should know how to access our system once you come on board. We give you an invite to our client portal. The way it works is that you place a deposit and then you get an engagement letter and an invitation to the client portal. So I know a lot of times we have clients come back, they say, hey, I'm looking in the folder, I don't have 2021 set up. Reason why is you haven't signed an engagement letter and placed a deposit. It's just our workflow. Anything you want to add to that?
I would just say, as far as the extension is concerned, we would need a previous year's tax return. So if we are going to put you on extension, that would probably be the primary thing we'll have you upload.
Yeah. So if you're new, if we haven't filed your, some of you on here are like, hey, you've done my taxes for the last 4 years. We don't need that. But if you're new to us, we can't do anything, like zero, not even file an extension unless we have a prior year tax return and identification. Lets us know you're really who you are. Once we have 80% of the information, we have an entire team that preps a workbook and the initial stages of the software, letting you guys know that, because sometimes we have clients that say, hey, I have a strategic question about a backdoor Roth. Hear that, and we're happy to speak to it. We just can't get to it until we have 80% completion. It's just how our workflow works. So if you do want those questions, feel free to put them in an email to your tax manager, whoever did your tax return last. For those of you returning, just know that the way to best handle this is to bring those questions up as a part of the draft return review. And of course, once we complete the return, we have a review and finalization. So I'm on step 4. If you're looking in the middle of the screen, we prepare the documents. Once we have 80%, we prepare the tax returns. There is a client intake form that I think is really important. We do have some clients say, hey, it's the same as last year. Do I really need to fill it out? I think we're pretty flexible on that, right? Yeah. When it's important, and this has happened, is you have someone that we've had for 3-4 years, and what happens? Things change. Give me like a drastic example.
Purchase of a new property, perhaps, or a move, address change.
The address change is big. Yeah. During COVID.
Primary.
Yeah. So your address changed, and we prepare the same address, and it's like, what the heck, guys? Why did you do this? I'm like, hey, there's no new client intake. The state that you move in, that you move from, your primary address, especially those of you with Airbnbs. It's important that we separate when it's the case. It's important that the address on the tax return reflects your personal address and not the Airbnb if it's not your primary residence. That's important because for those of you that do the sale of your primary residence, you need to satisfy the capital gain exclusion by living in that residence for 3 to 5 years. How does the IRS change that? Check that. They look at the address that you file on your tax return. So the address you file on your tax return is actually pretty important. Thanks for that, Sean. Other things is having kids, changing your dependents. We had a client situation where She had historically claimed her mother as a dependent, and then got, I think, her mother got audited, and they very clearly stated that she couldn't claim her anymore. And we didn't get a new client intake that specifies dependents, and we claimed mom again, create a whole new issue. We had to amend, take her off. So that client intake, we're flexible about it, but do look at it and just confirm that there's nothing new that you want us to know. Another input on that, and what I can do is I can pull it up, but one of those tables on that client intake is going to be tax estimates. And in terms of identifying what your penalty is going to be on estimated tax payments, you're going to want to know, we're going to want to know what you've paid thus far to see what the delta is, what payment you need to make to avoid a penalty. All right, so just back to our process. Once we prepare the draft, we review and finalize. Essentially what that means is we share it with you so you can review it, and you have to approve it. You have to in email write, I approve this draft, or simply approve. Yeah. What that means, sometimes we have questions, clients saying, hey, I've given you everything. Do you just file it? Do I get to sign off on it? Of course you do. Once we have your explicit approval, we'll send you, very important, e-signatures that authorize us to file, okay? As well as an invoice for finalizing the work. Based on those two, we now have authorization to file. And once we file, we'll send you confirmation of filing, as well as instructions on where you can track your refund or
to make payment.
To make payment. Exactly right. And I should have been just running through some of these as we go. You can see here, just to recap, the way you sign up is you have to sign an engagement letter, and you get invited to our portal. Just to recap, it takes us about 2 to 3 weeks from getting your information to actually preparing a draft. There's a lot of reasons for this. We don't have to rush. And I think what's important is that if you are on this call today and you have not provided all of your information, we likely cannot get you done by the 4/15 deadline. And I would tell you that's our general policy. So if there's an extreme exception that needs to be made, you can email me personally to ask for it, to avoid you having to ask your tax manager and elevating it up. The reason why is because there is a process behind confirming and asking for additional information. If you are sitting on a draft right now and you just need to approve, know that our deadline to file is April 8th. April 8th is our batch. We're filing everyone left. We need your approval. It's our day. The reason why is going back to the slide on finalization. The reason why is that it takes 2 to 3 business days to receive confirmation from the IRS that your return was actually accepted. In many cases, for whatever reason, especially if you have older kids, sometimes they file their own tax return and the return will get rejected. We'll say, hey, they've already filed. In some cases, if you set up a new business entity, the return will get rejected because it's a new EIN, and then you have to paper file. The point is, we are not going to be, we used to back in the day. We used to file on the 15th and found out on the 16th that it didn't go to plan. And then we had to go and ask the IRS for forgiveness on a failure to file penalty. So if you're sitting on a draft, coming back to it, if you haven't uploaded your documents, we will need to file an extension. I'll talk about that in a second. If you're sitting on a draft or your work is in progress, make sure that you communicate with your tax manager that you know the deadline to approve is 4/8. You know that we're going to batch file end of 4/8 so that we can give you a confirmation email the following week. So make sure you're in touch there and know where your return is. Coming back just to the preparation for some of you that are in the works of, hey, I have some information, I'm missing some others. I just want to highlight that the financials are really important. If you have revenue over 100,000 on Airbnb, Turo, freelance income, we'll make some exceptions for freelance income. But if you have an asset-based platform, we're going to want actual financials. We're going to want you to have an accounting system because of the audits we've been through the last few years, and specifically because for these platforms, okay, this is a big update. We have a blog post coming out about it. there is a new 1099K requirement, threshold that came out with COVID legislation that has lowered the threshold for getting a 1099K. Did you know that?
I did not.
You didn't know that?
Did not know that.
All right. Well, we'll forgive Sean, but it's $600. So it's the same as the 1099 miscellaneous. If you have $600 of income on these platforms, Airbnb, Turo, GetAround, Verbo, they're going to file a 1099K, an official document with the IRS. If you already got a 1099K, it's because you were in previous years, it was because you had more than 2,000 transactions and more than 20,000,
200 transactions.
200 transactions,
20K in income.
20K in income.
Revenue.
So it used to be high. It used to be 20K used to be easy to hit, but not everybody had 200 reservations in a year, especially if you have 3-4 day reservations in one property. So everyone's getting a 1099K now. And the reason that's important is because if you file anything without that 1099 income, the IRS is going to send you an adjustment letter. So what's my punchline? If you have substantial revenue, which we're defining as 100K, and I'm saying this at risk of tax managers coming back, Mike and Carla saying, hey, Miguel, we want it for 50K, but I'm just going to create a high threshold. If you have 100K in revenue, you're going to need to have some kind of accounting software. And if you're not there today, you'll want to talk to your tax manager about how to do that. Either how do you solve the prior year? And of course, how do you get that right going forward? Because it used to be the wild, wild west. Shared economy used to be like Airbnb, taxes. How do you do that? The IRS has caught up. I think they've watched a lot of our content and they are now making sure that this stuff is done right. So there's a lot of updates that are coming out. I don't want to make this call too technical. Again, the point is that if you're in the upload process and you are working on your financials and you're in that threshold, we're going to have to extend you and find out, project manage, create a timeline of how we can get that done in the next 30 to 60 days. I'm going to keep going here and just highlight at the end, we'll talk about the deadlines on this last slide. But I just want to handle offboarding because I think there's a lot of ambiguity on, hey, what happens at the end? I've approved, I'm done. I want to talk about offboarding, and this is something that I will honestly say our firm needs to do a better job of because taxes are super draining. This season for us is we're like farmers. I always talk about the harvest. We're just getting it done, right? What I want to do together here is I want you, our clients, to hold us to a higher standard to say what's next, even when we're done filing, right? So I did say, once you approve, we file. It takes 2 to 3 business days to get the confirmation. Once you have the confirmation, you will get a PDF that confirms it. So if you're applying for a mortgage or for whatever reason the IRS says, hey, we don't have your return, IRS doesn't do it. California is actually infamous for saying we don't have your return when we do. Don't know what's going on there, but you can share that actual confirmation number, which has a unique code, which will be in your portal. You will get that as well as instructions of how to
file or
pay,
refund or pay.
Refund or pay. There we go. There we go. See, we got there, guys. So refund or pay is what you'll have. And you're not done, right? You need to, if you have a refund, you can track it. We send that to you so you don't ask, poor Carla, hey, where's my refund? Sometimes that is a legitimate question, but check the refund tracker first. The IRS in every state has a way to enter in your name, AGI, and it'll give you an update on where it is in progress. If you have to pay, you need to
pay by the 18th.
There we go. Yeah, exactly. It sounds trivial, but you'll be surprised some of these emails we get. You have to pay. You have to pay by the 4/15 deadline, and this is where we're gonna.
4/18.
It's 4/18 this year. It is 4/18 this year. I'm not changing. I'm saying 4/15.
4/15 it is.
Because if you do it by 4/15,
you're good to go.
You're good. So 4/15 is going to be the date to pay. If you don't pay by that deadline, okay, it's 4/18. I'm going to keep saying 4/15. If you don't pay by that deadline, what happens? That's what we're going to start talking about in just one second, because I want to close the point out on offboarding. We want to make sure that we're connecting with you on what your business goals are for the year after the deadline. There are additional requirements now. There's 1099-Ks. The IRS has put out a technical memo specific to how to handle short-term rentals. It's a very interesting memo. I'll put an asterisk on that. Some of you might be rolling your eyes, but it's a very interesting memo because let's just say a subordinate within the IRS that's doing field work, a field IRS agent, who my heart goes out to, by the way, because these guys have pagers, they can't email documents, they're encouraged to be out in the field, and COVID has completely disrupted how auditors work. And oftentimes, auditors are not bad guys. They are looking, or gals, they are really looking to catch egregious kind of overstatements, over deductions. And sometimes the way that the deductions work on paper, some of our deductions may be really high or really low. But suffice it to say that there's a memo now circulating in the IRS where a field IRS agent wrote to a superior, someone in the main commissioner's office, to say, hey, here's the fact pattern. It's very unique. And they describe the fact pattern, this is a rental business where they provide Wi-Fi, daily support. If anything breaks, they'll come out. They're describing short-term rentals. And they're on a platform and they do constant marketing. Is it active or passive? Well, this is not the call, but there will be a webinar that we'll do shortly on what that memo means, how it completely changes the game. The point is that all of these businesses, there's been a giant surge, according to the IRS, they're just coming onto this. There's a giant surge in micro businesses, and they're figuring out how to handle this, how to provide guidance to practitioners such as myself on how to properly do this. So my point is, we are moving away, we're shifting away from just doing one and done. We want to talk with you once, we just want to get last year's done. And we want to make sure that we're understanding what your goals are, concerns are, and how to optimize your tax bill, but optimize your, we call it a finance stack. How you pay bills, categorize transactions, close out your books on a monthly basis, and make sure that you have an idea of how you're doing financially is a significant capability that a lot of big businesses have, that small operators really need and don't get. So we're really focused on that, how to help throughout the year. We're official partners with Xero. We're official partners with Bill.com. We've added a lot of the technical capabilities to create what we're calling the finance stack. And we want to make sure that you're at least thinking about it. So those are calls and concerns that I'm not necessarily handling here. But the point that I'm making is hold us to the standard of, hey, what about your next? Thanks for thanks for the help with the tax returns. Where do we go from here? And, of course, give us some grace. We are completely exhausted by the end of the deadline. But that's not an excuse. And I do want to hold our team more accountable. And I encourage you to hold us accountable as well. And you can just add what's next. Let's come back to the deadline. We want to talk about what the penalties are for those of you that are getting extensions. We'll want to say, number one, we have a monthly batch system. Can you talk about the monthly batch system?
Yeah, so we'll on 4/8 we'll batch all of our returns, file them, and then we'll have a deadline after the deadline for all of our extensions. I'm not sure if we determined that date yet, but
5/15 and 6/15.
Okay.
Yeah,
and then we'll file those returns by those batch dates.
Exactly. So after 4/8, what's next? Well, we're not saying that we're going to take the month off after 4/15. In fact, we did this last year because the deadline, remember the deadline changed.
Yeah.
Was last year July 15th and the year before was May 15th, or was it the other way around?
The 2020 was way delayed. That was like
2020 was July 15th.
Yeah, and then I think 2021 was May 15th.
That's right.
Yeah.
So we've learned from having these COVID deadline shifts, and gosh, it'd be great to get one again. And the reason they're so helpful is because interest and penalties start accruing if you owe. Okay, so I'll say it this way. 4/15 is the deadline at which, if you have not paid your liability, you will receive interest and penalties. That is a fact. Is there a way around interest and penalties? Yes, but it's a very rare exception. Okay. The way around interest and penalties, number one, is if you've paid your tax liability through estimates. Okay. Number two is if you have not received, if you have not paid late or received an interest or penalty in the last 3 years, you can typically get abatement. Okay. So you have to be a really good player for the past 3 years. Those are really the two only exceptions. Outside of that, we should talk about mitigating those interest and penalties and coming back to the batching system where we have a deadline every 15th. And by the way, if you say, hey, I'm a 515er, we will hold to that, but we will also expect that you will review and approve to meet that deadline. The reason we have that, why do we have that? One, we learned it from these COVID extensions, that we should just have every 15th kind of batching, so that if you know you're not going to get your K1 until June, that's fine. We'll put you in the 715 batch, and we can work on the 615 and the 515s, and we'll talk to you after the 4th of July break or whenever that K1 comes in. But the other reason is that the interest and penalties hit every 30 days. So it's not daily, it's every 30 days. So if you pay on, let's say May 1st, let's just say that you're one of our extenders and we tell you, hey, look, we're not going to push it that much farther, 415, but the queue right now for 415 is just log jammed. We'll get you done by 5/1. What that means is that you will get the first 30-day penalty treatment. So let's start talking about that. The penalties for late filing are going to be, not late filing, rather, you're filing on time because you're getting an extension. Okay, I just want to be very clear. On April 15th, 18th, you are going to get a file extension to file when, Sean?
October 15th.
October 15th, exactly. It's not going to be October 18th.
Yeah, I think it's the 15th for that particular month.
There you go. So you're going to have till October, okay? Before then, so you think, okay, great, I'll file on October 14th. That's how the mind works. I've been in this business for a while. What's going to happen every 30 days is you're going to accrue more interest and penalties. And I'll give you those percentages. And if you have a pen and paper, this is time to write it down, okay? The interest itself is 4%. It used to be lower. You know why it went up?
Let it go up.
Take a guess.
COVID.
Why do interest rates go up?
Oh, inflation.
Okay. Who controls interest rates?
Fed.
The Fed. There you go. Nice. Fed raised interest rates. Now it's 4%. Used to be 3%. And I think it was even lower before that. Is it 4% a year or 4% a month?
Per year.
It's per year. Exactly. Sean's on it. 4% a year. So you take 4% divided by 12. That's what the monthly interest is going to be to the IRS. The IRS says, hey, you owe us this money. You should have paid it on April 15th, April 18th. And every month after that, we're going to charge you interest because that's what we do. Now, there's always someone on this call that's really upset about that. And I personally hear you. A little bit of libertarian in me as well. Just kidding. But every 30 days, you're going to get an interest penalty, an interest. Okay. Now let's talk about the penalty. Sean, bonus points. What's the penalty on a monthly basis?
That I don't know.
Take a guess.
10.
10 what?
Percent.
10%? Jesus. It's 0.5%. So every month, 0.5%. And I believe it's up to 5%, but it depends on how much tax liability you have. It's going to be 0.5% every month. So 4.5. So it's 0.5% a month. And then if you do the math, if you take, let's just do the math here. And then 33 basis points for the interest charge. So essentially 83 basis points, about 1% a month. So if you think about that, if it's $10,000 that you owe and you don't pay on 415, okay, every month you're going to have about $100, right? Mm-hmm. Yeah, every month you're going to have about $100 added to your bill. Okay, there is a penalty if your tax liability is above $25,000. The penalty goes up. it goes up significantly. And it can be up to 25% of the tax liability if your tax liability is very big. So if you have a big tax liability, the punchline is going to be that you need to have somebody, us, create a projection before 4/15. That projection we can do, and we can tell you what your liability is going to be, and we're going to be very conservative on it. So we're going to tell you to pay a little more. Up to you how much you pay. Usually we're trying to get under that threshold, but we're trying to make some payment on 4/15 with the extension to avoid accumulating significant interest or penalties. If we were in a room, I'd say, does that make sense? Or does anyone have questions? I guess what we can do in Zoom is if you do have questions, you can throw them into the chat and we'll take a look at them. But again, what we're getting at is every 30 days, what happens every 30 days?
Interest.
That's right. Interest and penalties accrue again, right? So new round of 0.5% and 33 basis points. So new round of 1%. So that 1% is going to keep adding on every month you don't file. So our batch deadlines for those of you clients on this call are very important. If it's 5/15, that's fine. If you know you have a K1 and you're now in this category of, man, I've got a bunch of investments. I now have a bunch of investments where I have 3-4 K1s a year, and I happen to know their accountant. They're going to get them done like June, July, August, hopefully before September, right? I'm not going to get K1s till September. Well, I know I'm going to have a balance. I'm a business owner. I'm a partner here. I have to make a payment by April 15th, and I have to estimate it based on what that K1 is going to be. For our fund clients, our high net worth clients, they make us give them a draft K1 before April 15th. I'm talking multi-millionaire, billionaire. And I was explaining to the client, they're like, hey, the 3/15 deadline's over. You guys are chilling now, right? And we're like, no, all of these investors are going to want to draft K1 to know how much to estimate on their liability, because they've got taxes in the millions, right? And these interests and penalties can be significant. So they almost rather pay in. Interest rates are so low that they rather overpay at 0% interest and then get it back as soon as they file by that October 15th deadline. So if you're starting to creep into that space where you expect to have tax liability north of 10,000, that's going to be our kind of final and best advice. Have at least basic documents into the portal for us, your W-2, your 1099 B or div, which has your capital gains. It's going to be a big one, as well as at least a general idea of what you made on your Airbnb. I can actually, or Airbnb, I was going to say Airbnb, Turo business, or sole proprietorship or S Corp if you're not done with those. But we can also live without the business and just get a rough sense on where the W-2 is, unless, of course, you think that you are going to have over, here's our threshold. If your business income is going to be north of 6,000 and you have an active business, you're going to need to pay something by 4/15 because the self-employment tax is what's going to get you. So again, I can't get into the difference between self-employment tax and federal income tax, but if you've got a separate active business and you haven't done the books for them, you'll at least want to do some back of the envelope math to figure out if your net profit is north of 6. If it is north of 6, just give us the financial, give us the estimate. We'll put it all together. Have that in the portal, because we're going to send an email communication with this video recorded in the next 2 days, 3 days. When are we do it?
We do that.
What day?
We'll do Friday.
Friday?
Friday. Yeah.
Okay. Yeah. And today is Wednesday 30th for those watching. Friday, April 1st, we will send an email with this video with these markers of when you need to make an estimated payment, and what the interest and penalties are. We'll disclose what the high penalties are. They're not good. It's just the punchline. Like, they're not good. So again, 10,000 liability, you're going to be paying $100 a month to the IRS. So on our side, if you're actually, I think everyone on this call is a client. we'll want to make sure we've got a hard deadline by which we're going to file. If you're already filed, you're golden, except we want you to hold us to this offboarding and support. We want to make sure that we're at least thinking about you, and maybe there isn't a whole lot to do if you've wound down a business or, you know, taken a sabbatical or something like that. But hey, I'm telling you, we'll want to, we're happy to give you advice and maybe talk about what the year looks like in any event. So take advantage of it. I'm going to pause there, and I don't think we have any questions. Actually, I'm going to stop recording just so that we can at least have space in case anybody wants to ask something unrecorded or anonymously, whatever. So I'm going to let Sean have the last word on next steps, recap.
Yeah, if you guys need assistance with anything, let us know. You can reach out to our office line on the screen there, 888-724-915. And then we can connect you with whoever you need to be connected with. If you're already signed up for 2021 return, then we'll either put you in contact with one of our preparers or myself, and I can we can figure out where you need to go and who you need to talk to. If you're not a client, then let's get started.
Sure, happy with that. All right. Well, actually, we do have some questions. Let's see if we got some specific questions. Okay, specific questions. I see you. I can send me an email, in fact, because yeah, send me an email. We're going to wrap the video here. Again, the idea is that every 30 days after the 4/15 deadline is important. So if you don't make the 4/15 deadline and you do get an estimate, make the payment by 4/15. Okay, if you don't do 4/15, you do 4/16, you're okay. If you do 4/17, you're starting to procrastinate, but you're okay. If you do 4/18, there's no guarantee that the IRS website will be up, and you might as well consider that late. But that's just how I look at deadlines. So with that said, thanks for this time. Again, like Sean said, reach out to your point of contact if you already have one as your client. If not, go to our website, fill out the get started contact form, and someone will reach out to you about how to get started. So thanks, everyone.